Today we've got Conor Hull in from CW Finance. Conor went out on his own 6 months ago. He went from employee to business owner, so we're going to deep dive into that journey. We're also going to look at the types of finance available. So if you're a small business owner, you don't know how you can finance stuff, this is definitely for you. Conor, thanks for coming in today. You've recently taken that journey from employee to striking out on your own.
Yeah.
How was that leap?
Yeah, I started off basically in the motor trade. I was in the motor trade for 10 years. Then made one little step into sort of asset finance, where we just did work within asset finance with a partnership. There was 3 of us doing it, and that's where I sort of learnt my sort of trade within the asset finance world.
Yeah.
And after sort of 4 years of doing that, it sort of became obvious that it was time maybe for myself just to make that jump into the next stage, to work on something for myself and to have something for possibly my children or a pension or whatever, like just to build my own business, something to build myself.
How's it been?
Yeah, it's been good.
Because you're kind of the master of your own destiny now, I guess.
Yeah, it can be. There's a few things that I didn't expect to have to do. Like you're doing the marketing, you're an accountant, you're having to find your customers. You're then having to deal with the customers that you've already got and contact all your customers that you've got in the past.
Yeah.
Sometimes you could be sat there, like I work from home, it keeps costs down, there's no charges for that. So yeah, I'll be sat there and I'll be wondering why the phone's not ringing, or what's going to happen. Like why is it not ringing for even, it could be 2-3 days. Like in asset finance, that can happen.
Yeah.
So you start to panic a little bit sometimes, and it might go a week even. Like and you're still ringing your dad up or your brother up and saying, "Here, what am I doing wrong?"
Yeah, what am I doing wrong? How's the motivation changed internally? Like, have you gone from, is it a different drive now?
Yeah, completely different drive, because everything you do is for yourself. That commission you may be making or building your business is for yourself at the end of the day and not for somebody else.
Are you managing to work decent hours, or are you working every hour under the sun?
I'm working decent enough hours, like at the minute. Again, I'm trying to build my business, but within asset finance, and your businesses, to get them businesses, all people who you know, it's people who trust you, people who, like a friend of a friend has passed on details. Like if you're financing a big asset, you don't want to be speaking to anyone sometimes. Yeah. So, no, I'm fine. Like that's fine. I'm yeah, sort of 9 to 5, 9 to 6. And
what planning did you do beforehand? Because you're obviously in that employee headspace, and you're like, right, I can do better, I can do more. What was the process you went through from kind of making that decision to going, right, today's the day?
Well, it was like sort of, first it was a year and thinking about it, and then while I was sort of still working for the other company, it was sort of 3 months of planning, setting up my FCA, my accreditation, getting brokerage set up properly, so that I was ready to hit the ground running.
Yeah.
But previously to that, like it was a year of me looking at what I was pulling in, what my customers were bringing in. A lot of the stuff was through my mobile phone and contacting me directly. So I knew that when I did make that leap, my phone would still be running.
Yeah.
And I would still be busy. So I was able to sort of judge, to know that what I need to make each month, find out what my overheads are and what my costs are back to the umbrella company that I ultimately broker through, which is Rural Finance.
Okay.
Yeah, so I just crunched the numbers, and my brother and my dad are both self-employed, always work for themselves, so they were like, you need to make the jump, like Conor, you just need to do it.
You need to get over it.
It's good to have people like that behind me to push me on and say, right, just do it. Like my dad would be ringing me up once a week being like, right, have you spoken to them yet? Have you signed anything yet? Like, what's the deal? Sort of.
That's amazing, that though, having that support network, because it's quite lonely sometimes, especially if you're at home and the phone's not ringing.
No.
So to have that kind of kick up there, I guess.
Yeah. My dad's sending me videos of people online saying, "Oh, you need to get yourself out in line more." You need to, like, so
well, we're here today now, so you're doing it, so you can ring in tonight and be like, "I've followed it. I did what you told me to do."
You know, exactly.
So it's quite, I suppose it's nerve-wracking, but it took you 3 months really of preparation.
Yeah, so speaking to, so within asset finance, you've got these umbrella companies that you would sort of broker through, so we get the best rates.
Yeah.
And I'm with Rural Finance myself at the minute, who ultimately look at agricultural finance. But we can broker anything. So yeah, I was speaking to the other different guys out there that do it, and just making sure it was right. Then it takes sort of 8 weeks to get set up. obviously you need to have sort of experience behind you. They want to vet you. They do
Yeah,
credit
to make
checks
sure
on
you-
yourself and look at and just ask you. You have a couple of conversations with them, the directors and everything. So
Yeah. And did you do that while you were still in the old role?
yeah,
So kind of side by side.
yeah,
just
side by
prepping,
side.
really?
Yeah,
So it wasn't kind of finish
no,
3 months of setup and then go. You kind of got to hit that ground running.
no, I didn't have any sort of gardening leave or anything I needed to do either previously, because I was nearly semi self-employed with the previous
Cool. So you
company,
kind
like,
of just.
so I was able just to.
What's the biggest thing you've learned so far then?
I think I was just surprised at actually how much you have to do. Like, I mean, even sitting in opening clipart or whatever, like you're on Adobe trying to create an image, like
Yeah.
a brand image for yourself, or if I want to put a picture of a car up with prices, figures, and everything on it on my Instagram, like take me an hour or two. It's like sometimes like stuff like that. Then obviously you got to keep a track of what money's coming in, what you're making, what your tax at the end of the year, and everything else. So
Yeah.
that was a big shock for me. Like I obviously knew it was going to happen, but like,
Guess it's the thing.
trying to work.
It's that learning curve, isn't it?
Yeah.
Like you go from not having to think about any of that,
I know.
and then all of a sudden it's like, well, if the phone's not going to ring if we don't advertise, right, got to do that.
Yeah. Exactly.
So like it's definitely a lesson that a lot of young entrepreneurs are going to go through.
Yeah, well,
especially
lead
first.
generation's fine. I'm fine with lead generation. Like
you
that's
can get
my,
the business
that's my,
in.
it's my job, but like, yeah, it's the other stuff of doing Instagram, your Facebook, your LinkedIn.
The admin type bits
Yeah,
that aren't
yeah, yeah.
directly responsible for stuff.
Yeah, exactly.
How much time are you spending on that compared to kind of selling and lead gen?
At the minute, it's sort of 30% on trying to create like decent content to get that out there.
Yeah.
Lead generation is keeping in touch with my old customers currently, seeing if they know anyone else within the business, or I'm not cold calling as such. Try and stay away from that with it being finance.
Yeah.
I always find better leads come from like people that you already know.
Yeah,
People already in business, small business, big business, like, or old directors. Like you'll find that some people move, like finance directors move from big company to big company. So just keeping in touch with them. They then move into another company like facilities management, and they might need some more vans. So
Yeah.
just that's what I would do a lot of.
So the
Just
next deal's
networking is like,
always
yeah,
in your phone, then I suppose.
Yeah.
You just
Yeah.
got to keep in touch with
that's it.
everyone.
It's
And
networking, like it's keeping in touch with people.
well, we always know Conor could network. So obviously we've gone back 25 years from
Yeah, I
uni.
have, like I.
So it's amazing to see that journey of you coming out and then kind of drive forward.
That's it. Working for Flyerettes. Eh?
Yeah, giving out flyers back in the day. How crazy a journey we've both had.
mental,
Like
isn't it?
going from leaflet distribution in Newcastle city centre
Yeah.
to today.
I know.
I don't even know if you're
bikes.
allowed to do that anymore. Oh, those bikes, Jesus! If we can find a photo, I'm going to put a photo up of Conor on a bike with a massive A
Nice
board at the
shield.
back of it,
It was raining, wasn't it?
riding round all around the place.
Yeah, it was good.
Like, they were my first journey into
Yeah.
kind of business ownership, really. And
They weren't cheap, like either.
no, they weren't cheap. They were paying us to move, and again, like the lessons that you're kind of learning now, I was kind of having then. You know,
Yeah.
you've got to chase business, you've got to get it in,
Oh,
you've
aye.
then got to pay everyone, you've got to manage your costs,
Mm.
and like it's just a cycle, and it's a kind of growing up curve.
Yeah.
You get there eventually,
Yeah.
and thankfully I'm now at the other end where I don't have to do a marketing and I don't have to sell anymore, but you kind of get dragged into everything, and
Yeah.
it does get better, and I suppose
Yeah.
you just get quicker at it. That image that took you an hour will eventually take you
Yeah.
10 minutes, and,
That's it. Like
and
I
you just got to kind of build into it.
just keep going. Like I.
People hear finance and kind of switch off. Like it's
Yeah.
it's not the most exciting topic in the world.
Mm.
How would you explain the main types really simply? Like what options do people have?
Well, obviously, you got your normal finance, your asset finance, which is hard finance, hard and soft finance. So you got your hard assets, which are wheeled assets, cars. Your soft assets could be like this room, for example, soft furnishings, phones, stuff that generally doesn't have an end value whenever people come on to sell it.
Okay.
Whereas hard asset will always have a value. And then you've got your HP with hard asset stuff. Sits on the balance sheet basically. You make your payments and you own it at the end. You've got lease, finance lease with hard assets as well. When that won't sit on the balance sheet, you can generally pay your monthly payments plus VAT, so
Right.
you don't have to put a big deposit in at the start. And it makes the company generally look a little bit more flexible whenever they're coming to lend more in the future. some funders do like to lend as a lease purchase rather than HP, but it's all down to the individual, really, I think, or like your accountant will say where he wants the money to sit and how he wants it to look.
Yeah, so it's being creative, I guess, on...
Yeah,
how
it
it
can
looks.
be. Yeah, because if you've got £200,000 worth of tractor being leased, that's not sat on your balance sheet. That just comes out as a monthly payment, as a monthly cost,
Yeah.
and then they write it down that way.
So if that's not on your balance sheet, do you own it still?
No,
So you're
you're renting it,
effectively.
yeah. And then, but you can just continue with a peppercorn rent at the end of the term.
Right, okay.
So it's continue on.
So you might buy that for 5 years on a lease purchase, and at the end of 5 years, you don't have to give it back. You just kind of either keep making the payments or
Keep making
the peppercorn.
rent, yeah. Or you can sell it to a third party. You generally, it just depends on the agreement itself, but it could be you get 97% back of the worth of that vehicle.
Right, okay.
3% goes to the funder.
All right, okay, cool. So you don't technically own it, but
Yeah.
it sits there as
Yeah.
as
So you pay £200,000 off of that tractor, and it's still worth 50,000 or 80,000. There, you get 97% of that back.
All right, okay,
Just depends on the.
cool. And then so thinking about SME, I don't know. We've just bought 5 new vans, and thinking about the requirements to get that asset finance in place. What do you need from a documentation perspective?
So for a limited company purchasing, we just need limited company details, director details. If all of that's very strong, just depends on the funder. But most recent set of accounts is the only documentation details we would need,
Okay.
and general details on the director.
What are the finance companies looking for? Are they just basically making sure that you can afford it?
They'll be looking, obviously they've got your credit score, business credit scores online, and they can see turnover and profitability online. Most, if they ask for 3 months business bank statements, they'll be looking at serviceability of that monthly payment.
Yeah.
So if you've got a £3,000 a month monthly payment on these vans, then they want to see that in the bank for the last 6 months. Basically, they want to make sure that you can afford to make that payment.
Okay.
That's what they'll generally look for.
Okay. And I guess because it's kind of hard assets, it's a vehicle. Like it's secured against the asset, I guess.
Yeah.
So like if you don't pay, they're gonna come and take it back off you.
Yeah, that's exactly it. Yeah.
So does that make it a little bit less risky for them?
It does, yeah, and that will bring the rates, so that adjusts on the rate. So hard asset rates are always a lot cheaper than your soft asset rates.
Because there's something tangible there.
Yeah.
Right. Okay.
So it's yeah.
So if someone wanted to apply with you, they just need to get their accounts ready, have their company details. What director details are they asking for?
They're just asking for home address, last 3
Okay.
years home address, and date of birth.
Okay.
And that's it. Most of that stuff is on company's house, but obviously the house number sometimes isn't there, or
Yeah.
if that's their home address or their date of birth as well. But
What about PGs? Are they asking for PGs? Are you seeing that on every deal?
so they can do, if a business is borrowing a lot of money, and you can see that, or they've lost money in the last 2 years, or it's a declining balance sheet, then they'll ask for a PG, where they'll run credit checks. 9 times out of 10, a PG will only really work whenever that director's a homeowner.
Yeah.
That's what they really want to see. They want to see some money behind.
Yeah, I guess if you've got no assets, then you're going to sign a PG
Yeah.
all day long because
Yeah.
there's no real risk anyway.
Yeah, exactly.
Whereas if you've got your house, you might think twice beforehand. I don't mind signing a PG on stuff like vehicles.
No.
Because if they really hit the fan and you can't pay your £500,000 a month for the vehicle,
Yeah.
you just drive down to We Buy Any Car, sell it, get the cash and pay the debt off. Like it's relatively easy to deal with.
Yeah.
I'm really kind of against taking PGs on nothing, like cash flow loans and stuff.
Well, every cash flow loan requires, most do. I don't know if you've come across one, but I know your funding circle and Iowaka all require a PG.
Yeah.
Because you're sending, basically, you could send £300,000 into a limited company. You could just pop it.
Yeah, you pop it out and it's gone.
Gone. Like, yeah. So there's that. But if I'm ever getting like a proposal on my table, I'll always look at it as it's my own sort of money. So, and if I would always get worried if it's somebody that a friend of a friend that's asking for £100,000 for a car or an asset itself, I would always sort of question why they may not give a PG.
Yeah.
Like there shouldn't be a problem. Like if you've got a a good business and it's an asset for your business, then you shouldn't be worried about
why
Yeah.
why you're not
why you're not
guaranteeing it. I
guaranteeing.
suppose it's a tough one, isn't it? And having bought so many insolvent businesses, I kind of see the end of the stick.
Yeah,
Like I see what happens when it all goes wrong, and which just makes me nervous.
are these directors' cars or are they like
Just-
assets for?
yeah, it's a range. I mean, like you see the cash flow loans all the time, especially when a business is distressed
well,
because they need the
right,
cash
yeah.
and they're just desperate. Like if you're in that situation, the last thing you should be doing is signing a PG. But on kind of physical, tangible assets, as I said, I don't mind. Like
Aye.
because if it retains its value, you know, if it's software we're buying, absolutely not. But like if it's computers or vehicles or data center equipment, whatever it might be,
Yeah,
I just tend not to mind because, as I said, if the world
the
ended,
business.
you could just go and sell it again, and like you know, all right, you're not gonna have your vehicle anymore, but
Yeah.
it doesn't really matter.
Do
Like
you see a lot of invoice finance at all in that? Like obviously, it's a big one. Once you get into invoice finance, it can be sometimes hard
really
to get
tough
out.
to get
of.
out.
Yeah.
Yeah, we don't have invoice financing whatsoever. It's
Yeah.
something that we've not touched,
Yeah.
and I've seen it go wrong.
I think
Like
it's good for growth. I think if you're growing really, really fast, and maybe in the construction industry, for example, 60, 90 days, I think sometimes they can take to pay.
yeah,
And you need that.
you
Like,
need that cash flow. It's a tough one, isn't it? Because once you're in,
Yeah.
getting out of it is really tough. Like you've got to be really profitable to try and pay it down.
Yeah.
And I mean, the reality is like we're 6,500 customers, but a lot of our customers are like 30 quid a month. Like it's just not really financeable. Like,
Yeah.
whereas I suppose if you're in construction and you send someone a £1 million invoice,
Yeah.
getting that cash today actually
helps
can be
massively,
really useful. Especially if you're on 60 or 90 day terms or there's retention. I can kind of see why. And as long as it's controlled, I don't necessarily think it's a problem. But I think I'd be nervous putting a PG on invoice financing, that's for sure.
Yeah.
Because you're kind of guaranteeing that your customers are going to pay,
Yeah.
which I don't see how you could ever do. And I know that you can then insure them as well.
Yeah. Bank chases them
But
as well.
but my experience of insuring invoices has been painful. We've tried it a few times and it's never quite worked. From kind of looking at the different types of purchase then, so you've got HP and you've got leasing, and you kind of touched on one was on the balance sheet and one wasn't. Why would you choose one over another? Is there any other reasons?
Well, here with HP, if it's on your balance sheet, generally you can claim back all your tax in year one, all the benefits basically. So it's £100,000. I think you can benefit of £25,000 tax relief.
Okay.
So that's you can take that straight away in the first year. If it's on leasing, then it's yearly or monthly.
So it's like P&L based, effectively.
Yeah. So
okay,
that's the main difference, like I would say. Again, it's the leasing is you wouldn't have to pay up from the VAT. So you got £100,000 again, and you got to pay £20,000 in VAT.
Yeah.
If you don't have that VAT, then you would put it on a lease.
Okay.
And you can just claim back your lease every quarter instead of claiming it back at the start.
Sound. Okay. And then from a structure perspective, obviously you've got deposits and balloons. What is it for people that don't know what a balloon is? What is a balloon payment?
Like I do an awful lot of cars. Like it's my sort of main niche bit at the minute, certainly. Like where you could be looking at, say, a Defender or buying 2 Defender commercials, for example, at £120,000, and you can put a balloon in of 60,000 if you wanted to.
Yeah.
And then after the 4 years, you make a decision what you want to do.
Okay.
What that does, it just makes your monthly payments a bit more manageable.
Okay.
Now, once you get to the balloon, then that does need to be looked after at that stage. So you can refinance that or sell the cars. If the cars are worth 60, then great, that covers it. If they're worth less, you may need to put a bit of money in.
Yeah.
If they're worth more, then you'll get that money back as equity.
Okay. So basically you're saying like this Defender is 70 grand. It's going to be worth 25 in 4 years' time. So we'll take that and we will pay that at the end of the term.
Yeah, exactly.
And then you either sell the vehicle at that point
to
pay the finance off, or you refinance it at that point.
Yeah, so there's a lot of refinance sort of happening because you could have a good car.
Yeah, if you've looked after it from brand new, you might want to keep it.
Yeah, and there's some good banks out there like Paragon Motor at the minute even, like they're great for refinance.
Yeah.
Through a finance broker, like it's a day and you just put in the details, put in the settlement, even for personal customers can do it,
Right, okay.
and it just they just refinance it at a low rate, so it's good.
All right, okay. So you can literally just go, well, look, I've now effectively you're just buying the van again, or the car again. So you're just saying, right, well, I now need a loan for this settlement figure, and they just stick that over the next 3 or 4 years.
Yeah.
And you just keep the asset and just keep paying it down.
Yeah.
Right. Okay. And then deposits. My experience is a lot of places do just like the VAT.
Yeah.
Is that standard?
Yeah. So within business, definitely, the VAT is standard. It's a minimum. You can defer the VAT now if you want. So
Right. Okay.
you could say, right, well, my VAT return bill is going to be in March, and you're picking it up in January. Well, your payment in March will have the VAT on as well.
Yeah.
So that will cover that.
All right. So you can kind of just pay in a couple of weeks, over a couple of months, just to kind of tie in with your return.
But yeah, VAT minimum is standard, unless again we're going down the lease route where everything's plus VAT.
Okay. And then what's the standard deposit on a lease then?
It could be 0.
Oh, can it?
Nothing, yeah.
All right. Okay. So you could literally pick an asset up
It's a
tomorrow
finance
and
lease, yeah. You could pick it up, but your payments are all plus VAT, and then you claim the VAT back every quarter.
And I guess the balancing act is repayment amount versus term. Then it's kind of like if you're trying to make it reasonable day to day, month to month, you kind of want to put something up front on a balloon to try and lower the payment.
Yeah, a lot of it, like I know quite a bit about sort of your leasing, what way you'd want to do it, like in hire purchase lease, want it in balance sheet or off a balance sheet, but a lot would come from the accountant and how they want to structure it, and how they would know an awful lot more, and be talking to the customer a lot more about tax. And
do you think a lot of people speak to their accountant before they do a big asset purchase? I don't think they do. I like to think they would, but I don't. I'm not convinced.
Not talking to me about it.
I'm not convinced that people go, hold on.
Some do, some will say, I'll get a phone call and they'll say my accountant's told me to spend some money.
Right, okay.
I've got my corporation tax bill coming up, and maybe I don't have the money for my corporation tax. So you can spread, you buy something and you're ultimately spreading the cost of your...
I need to change my accountant to say, go and buy a stupid car. Like, my accountant doesn't do that. He tells me to buy electric, which, if Carl's watching, I'm never, ever going into an electric car, Carl. And you've got that on record now.
You tried to buy a Leaf off me as well when I was at Nissan, didn't you?
Yeah, well, did you never hear what happened with that Leaf? Have you never heard that story? So
I think go on.
Let me do it because it's quite a funny story. It was the first time I'd ever driven an electric car, and I'm sure I was told the range was like 120 miles at the time, and I had a meeting in Coventry. Now Coventry's 60, 70, 80 miles away.
Yeah.
Sound, I'm going to go for it. And so I go down the M1, and I turned right off the motorway and start going towards Coventry, and I had like 10 miles of range left. It's right. So found somewhere to stop. Got to this council car park, and there's someone parked, not an electric car, just a normal car parked in the space. So I had to park behind it, traipse this cable over the top of it to try and charge. Just about got enough charge to get to Coventry, got to my meeting. Before the meeting could start, I had to borrow his electric to put an extension lead out to charge it again. Got back in and was like, oh, still don't have enough charge to get home. Right, so ended up in IKEA. The IKEA in Coventry, you have to pay to park in. So I had to pay to get into the car park, then pay to charge it again. Then started heading home, and I had to stop again to charge. And I think the last 10 miles of the journey I had to do with all the heating off.
Yeah.
Like I was literally like wrapped up like this, shivering in the middle of winter because the range was just going lower and lower and lower. And I don't think I ever drove an electric car again for like 2, 3, 4 years.
That's when they just came out, I'm sure.
It was. They were relatively brand new.
Funny.
But like the naivety of someone saying, John, it's 120 miles of range. I was like, absolutely fine then. And the real world did not do it. But yeah, I'm never going back into electric car. Do people, if you're buying a big asset, do you always need big deposits then, or will just the VAT do?
I think so. It depends on the company. It really depends. Like, I mean, if we're dealing with a 10-year-old company that's making a fortune, because it's not just companies that need to borrow money, that borrow money.
Yeah.
Like, I've got some golf clubs I've got £3 million on the balance sheet. They've got loads of money in the bank, but they'll finance all their machinery. Everything's on a monthly payment, and then that's how they run their business, on a monthly payment basis.
I suppose it's better spending other people's money than it is spending your own.
It's much safer.
Like, I'd rather spend theirs and pay them back over a period of time and keep the cash in the business for an opportunity. Like whatever that opportunity is, but cash, I can spend cash in the bank if it's there. Of course, if you've spent it on a tractor or a trailer or whatever, it's
Yeah.
sat on it in the car park, you kind of restrict it at that point, and then you have to refinance it, which
Yeah.
is going to be slower and more painful.
Yeah, well, there's that. Yeah, certainly.
From a vehicle perspective, do you see restrictions on mileage on HP, or is it just on leases?
Just on sort of your PCP or HP with a balloon.
Yeah.
HP with a balloon will ask for a mileage at that. There's a bit. There will be there's a restriction within the document that says like this is based on you doing X.
Yeah.
But you're gonna ultimately at the end of the agreement you have to buy it or
Sell it anyway.
sell it
Yeah.
and then pay it off. PCP is where it's personal. It's a personal contract purchase where as a consumer, normal consumer, you're not a business. Yeah, you'd have to stay within the mileage.
Yeah.
And not be on the agreement. But if you say you're going to do 10, and you go way over that, and the car's not worth anywhere near that, and you want to hand it back to the bank, then they'll charge you for the mileage.
Okay.
But 9 times out of 10, most people either refinance it or sell it at a dealership early before they even get to the 48 months or the 36 months.
Right.
Get a new car, and then it
And then refinance
yeah,
the new
so
one.
the mileage doesn't come into it because it's based on the value of the car with that whatever mileage is on it at that time.
Okay, so the mileage is only an issue if it's getting returned
Yeah,
back to them.
Exactly. Yeah.
Like if you're gonna keep it anyway,
yeah.
and it doesn't matter.
Doesn't matter now.
Right. Okay. Cool. I remember when we leased. I don't know if you ever saw those Maxus.
I remember you
pickup
came
truck.
in because you were looking at Navara maybe at the same time.
Yeah,
You
so
were
we
asking.
bought. There was a deal about 2 years ago where Maxus had loads of pickup trucks sat in the dock, and they'd only sold like 11 all year.
Yeah.
Because who wants an electric pickup truck? And they ended up selling them all for 99 quid a month on 12-month leases, and we bought 2 at the time. Not because we needed 2, just because they were 99 quid.
Yeah.
99 quid up front, 99 quid a month for 12 months, job done. And then Leasing, the finance company, when they went back, I think I did like 2,000 miles in mine, and we had one in the office that did like 75 miles in a year. Like it barely got, they just didn't get driven. So they both went back, and then Leasing came in and were like, oh, we gave you 2 charging cables, not 1. And there's a scratch there, so that's 1,500 quid, please.
What?
And I was like, I've only paid 1,200 quid for the vehicle for a year, and now you want to charge me 1,500? And they were like, yeah. I was like, absolutely not. Like they didn't give me 2 cables, they only gave me 1. And when you looked online, it was rife.
Yeah.
Like they literally were charging everyone for this missing cable, and they did eventually roll over. But like that was probably the only 2 vehicles we've financed on a lease ever, and I had so much pain in getting them
I
returned.
think that's the pain with a lease, an actual lease where you have to hand the vehicle back, like a vehicle lease. You have to hand it back, and they'll come out and they're trained to just look at damage, like, and then they just go to the auction anyway, don't they?
Well, it was the auction that came and looked.
Yeah,
It wasn't
that's
even
it,
the
that's
lender, and then they sent this report through from BCA, I think, where it was like 1 millimeter scratch here, 6 millimeter scratch there, and you're like, it's a pickup truck, it's been in use, like.
Aye.
It's a commercial vehicle. Of course, there's going to be a scratch on the boot. What world are you in where that's going to change the value? And they were like, oh, well, you know, that's going to be 200 quid to get resprayed. And you're like, you're not going to respray this. Like, absolute bollocks.
It's crazy. That's the only problem with it. Like, they can be very cheap at the start to look at, and then you have to hand it back, and then
they get you at the end.
3 to 4 grand, and yeah.
From a rates perspective, where are rates at the moment? What's the market kind of looking like?
So rates is a difficult one to split, like especially in business rates, because you could be sort of anything between like sort of 10,000 to 50,000. You're probably around your sort of 8.5, 8.9% APR.
Yeah.
But it wouldn't work in APRs in business, so you're probably around sort of 4.5 to 5% flat, maybe 4.5% flat.
Okay.
Once you sort of go up north of £100,000, 150. to £200,000, then obviously rates can change and fluctuate. Also depends on the asset again. But if you're looking at a tractor at £200,000, then rates could be below 4% flat. Like,
right, okay.
You need to really have a look and see.
Yeah, I guess it's variable depending on the clients.
Yeah, depends on the clients, how strong a client is. I mean, you could be looking at a new start customer with 2 PGs. I've been looking at this at the minute actually, whether they're buying a couple of soft assets so they've got £60,000, they're looking to borrow 30,000. So I've just confirmed funding for £30,000 for them.
Yeah.
Complete new start, limited company, only started last month.
Okay.
The £30,000 that they've got is from another private investor. And the funder I've got to actually accept them, and they've been accepted on 19% APR, which is close to 11% flat.
Yeah.
That sort of gives you an idea of how, like, the difference in fluctuation.
But I guess it's still interesting that even as a new startup, they can get finance. They're not they're not completely blocked out of the market.
No.
They're just probably going to pay more money.
There's not very many funders out there that would do that. It's where it comes into knowing asset finance and knowing which bank to go to for what asset you have.
Yeah.
I think that's the major thing. I mean, if you get declined for whatever reason, sometimes it's not yourself or it's not the business's fault. It's the funder doesn't like telephones, for example. They like, I don't know, motorbikes instead. Like,
yeah, so some funders have got like specific things they like to finance.
Yeah, it may be that it's been put to the wrong person, or the business owner themselves has just seen an advert for Metro Business Bank. Yeah. But they don't like that, so then they're then worried. But yeah.
You mentioned APR versus kind of flat rates in there. What's the difference?
It's a really good question. That's the question that no one can answer.
No one can tell me.
Apart from APR, from what I can remember, what I think includes all the fees and charges built into the rate.
So it's like the total cost of payment over the term.
The total cost, including all your bill, all like the fees.
Yeah.
In there. I think obviously your flat rate's your flat rate. Like,
so the flat rate's the actual bit.
What you pay each year on it. So.
Yeah, okay.
But yeah.
And then is there anything that affects the rate that people are paying? Like I suppose length of business, time of business?
Yeah, of course. Like if your business has been trading over 3 years and you're profitable and you've got a good balance sheet, it's healthy, then you should be getting the best rates.
Right, okay. So it's pretty simple.
Yeah, if you're below less than 3 years, then rates can vary depending on cash flow. Cash flow's the main thing. Like if you're under 3 years in business, 3 years public accounts, that is, like on Companies House, 3 months business bank statements or 6 months business bank statements are always generally needed.
Okay, cool.
They're really handy helps me as well.
Sounds. And then from a mistakes perspective, what are you saying is the biggest mistakes people are seeing when they're kind of shopping around to get finance?
Mistakes wise, it's a difficult one because sometimes within business, if you might need cash for something else, and but 2 months before you've went out and bought something cash at like a hard asset. Yeah. And you should really like sort of plan what you need your money for, because if you were going to get a cash flow loan, for example, you're going to need to put DG and PGs on, and they're not cheap either. I think there's north of 15% sometimes. Hard asset finance is the best way to go. So then you'd have to start looking at refinancing assets you may have. But
so it's not planning ahead effectively.
Yeah, I think planning is really important. Yeah,
I need this today. I'm going to deal with it today. You're not thinking what you need in 3 months' time.
Yeah, I think planning. But I mean, when it comes to your business, I mean, everyone sort of makes mistakes, and I don't see an awful lot. I don't find out like what they are. Like I'm just sort of there to try and finance stuff quickly for people. And
do the lenders tell you why they've rejected it, or do you just get a rejection?
No, I'll ring up and ask, and I always need to have a gauge. They won't tell you personal stuff, GDPR and everything, but they'll give me a good gauge on sort of, right, it's been declined because say there's a CCJ. Yeah, I've had a couple of times maybe a CCJ in the background that the customer didn't know about. Okay. So then they've went off and found out about the CCJ, got it removed, got it all sorted, and then came back and got it sorted straight away. Yeah. So I think it's important to get good feedback from your broker or me from the bank as well. It helps because then I can place it somewhere else.
I guess if you know why it's not worked somewhere, you can then go somewhere else and preempt the issue and say, actually, we've got this problem, but this is why it's not a problem.
And as you can see from the bank statements, or as you can see from the balance sheet, they're a good company. I know them personally. Like even knowing somebody personally, me saying I've known this person for 10, 15 years, like they're a good person. It helps as well, because
so it's relationship.
I'm talking to humans at these banks. Some of the funders are storybook lenders, where it basically is, right, like a story of their business, what they do, what they plan to do. Business plans are important sometimes, like.
And you forget that, you know, it is their job to lend. Like they want
They want
to
an
give you the money.
excuse, and that's what a good broker will do, is speak to the banks and give them a good excuse to, and have a good write up and make sure they sell that lend to the funder as well as the business. So
Do you think people sometimes misunderstand being declined? Do you think they stress about it?
you can do, like as I mentioned before there, like they could get declined, but it may not be their fault. Like it could be something on their credit files, more so in the personal finance side of things, where I'm doing car finance for someone. It becomes very personal to them then, because they've been declined.
Yeah. Okay, cool. And then is the just thinking about debt in general, like good debt, bad debt, all of that sort of stuff. Do you ever sit there sometimes and think you should walk away from this deal? Like this isn't the right deal for you?
Yeah, there is sometimes if they're certainly on the personal side, personal consumer side, when they're looking to finance or try and finance negative equity, like I tend not to try and get involved in.
You just say it's hard to decline. I can't get your finance. Sorry.
Just like certainly the negative equity stuff. I don't really get involved in. I don't want to get involved in. Yeah. Because it's just making a problem worse.
Yeah, you're just delaying the issue further down the line.
The business side of things, it's difficult for me to get involved in that. Like I can put a proposal together for a funder.
Yeah.
Like, and I'll be honest with my broker managers that I deal with at the banks and say, look, this is what I see. They're gonna say it. They say it all the time, don't they? So I'll say, look, this is what I sort of see, and they'll say, yeah, we agree with that, or we don't, or actually there might be some of them come back and say, well, actually there might be something there for us. Like,
okay,
we might be happy to do that. So then I would just offer that acceptance back.
Sounds okay. Is the service you're providing free, or are you charging a fee to the client? Like, how
I don't charge a fee to the client. So I get my sort of fee or my pay basically through commission.
Yeah.
Which is disclosed for all personal.
It is disclosed now. I love it being disclosed. Like, is that made life more difficult?
Not for me, because
you're not taking the piss.
No, we never took the piss. But there's some boys out there like where, maybe 15% commission across.
Jesus.
Big £100,000 deals. Like sometimes it was crazy, but yeah, we were always sort of very.
Yeah, I mean, in a way, it's probably the right thing disclosing the commission out. Mm-hmm. Like, bought a car last year, and I took the piss with the guy that was selling it in the dealership, and was like, well, at least I'm going to know what you're making on it. And he got all awkward about it. But you know, if it's a fair deal and you're quite happy with it, I don't necessarily see the point. But equally, if I'd looked down and seen he was making 10 grand on it, I'd probably have pushed back a little bit and gone, like, how much are you making on this? But you know, at the end of the day, if it's a service and it's free for the borrower and it gives them the finance, if
you went out and found them the finance, especially for like the easy stuff, fair enough. Like if you're again a strong business, trading 3 years, like we didn't need to do anything really. You just rang me up and said, right, sort this out for me. We know it's going to go straight through. Yeah. You don't expect to pay an awful lot of commission, or I would never expect you to pay.
Yeah, like a few £100's probably reasonable. Yeah, it's just you processed it.
But if But
if you have to go and inspect it and
if I've got somebody that's got like a CCJ, and they've got 2 businesses previous that have went pop, and the banks have all seen this, but I've had to get 3 months bank statements on top of that, and then go to 4 or 5 different funders to get the funding. Then
then that's all just built into the effort that's gone into it. What's the weirdest thing you've financed?
I finance everything and anything. Like, I mean, we do everything in the agricultural world is a bit
everything's weird in the agricultural
world. There's like, we just do like, I don't know, did like a £40,000 what are they called, generator for a sawmill. So I did the generator and the sawmill beside it. Yeah, which was a good one. I thought just more interesting than anything else. And then sort of yeah, I find like the interest and stuff's like your flash cars and stuff. I like doing them.
Yeah.
It's all a bit of fun, but yeah, it's just like your horse box is just random stuff like that.
So you literally can finance anything.
Finance anything, yeah.
Yeah, and there's always a lender that will do it. They may
Yeah.
not do everything, but there's always
Yeah,
someone
yeah.
that will finance.
It's always someone like that.
What's the most expensive thing you've financed?
What was it? Trying to think. Sure, I've done a deal over 200,000 anyway for myself, which is
So they're like
you know,
big tractors and trailers and
Yeah.
like the big agricultural stuff.
big stuff like that. Yeah. Trying to think. It's not a huge. I'll struggle with when it comes to numbers or remembering over the last 5 years
Yeah, I bet.
of stuff that I've been financing. But yeah, there's been a few. Like I'm lucky that one of my good friends likes his cars. Like, so he's got sort of his Range Rover SB. He's financed through me, and his Ferrari through me, and yeah, we've won a few nice.
And we all need a good deal on a Ferrari, don't we?
That's it. Well, speak to me afterwards. Like, might be this.
Not sure I'll get that
helicopter.
signed off at home. The helicopter's a different one though.
I mean, that could be a funny thing to.
Yeah, we'll add that to the list.
Yeah.
The worst thing someone's tried to finance that you've just had to just say, look, we can't do that. Don't be stupid.
There was currently actually I'm going through one. I've tried to finance it for him, but I just can't. So with asset finance, we need it to be movable.
Yeah.
And I spent a while trying to finance £30,000 worth of concrete basically for a foundation. So I tried, but
And you just couldn't do it. I suppose there's no value for that, is there? At the end, like
it's just
you
a
have to
big
go,
lump
yeah, you have to go and dig it up at the end. It's not going to be
for a
valuable.
golf club as well, so they can't even get a cash flow loan because
Oh,
no one will sign a PG. So
so that's
there we
stuff.
are. Yeah.
Sweet. Today's been really useful. I think as a deep dive into kind of the finance, it's been really great. At the end of these, we do a quick fire section just on random questions.
Right. Okay.
Biggest business lesson?
I think it's I think I'm still going through that business lesson at the minute. It takes a little bit longer than you expect, I think.
Okay.
Yeah.
Sweet. Okay. And then the best decision you've made?
Going out by myself, definitely.
So that jump into
That jump,
trusting yourself.
get in and do it, and yeah, get on with it. Really.
Sweet.
Yeah.
Okay. The worst decision?
Oh, gonna be. Don't know. Maybe not doing it sooner. Like
That's a fair answer, to be honest. Looking back over kind of your whole career, is there anything you'd change?
Yeah, maybe getting out of the motor trade a bit earlier. You know, it was one of those. It's a good industry, but it's just I wish I got into the asset finance side earlier.
Okay.
Yeah,
Sound.
yeah.
I remember 20-year-old Conor, so I don't know what advice I'd give you, but I don't know what advice I give to me. But you looking back to kind of 18, 20-year-old Conor, what advice would you give him?
So it's basically stay consistent, I think, and keep going.
Yeah.
I would say get started earlier. I would have like yourself. You've been self-employed all your life, basically.
Yeah, pretty much. No.
I'm literally 37 now, and I'm just getting going. I wish I'd started earlier. Like
Yeah.
definitely.
Okay. Wicked. And then the final one, the best book you've ever read?
Shoe Dog.
Okay.
The about Nike.
Yeah.
That was a really good book.
It's a good book, definitely. Super. Conor, thanks for coming in
All
today.
right,
It's been a
cheers.
pleasure.
Yeah.
Nice
Thanks
one.
so much.